Hey, Sam, good Monday morning to you. Thank you for being here with us. What a November it has been. When I was looking, when you see all the major averages up 11, 12, 13% for the S&P, Dow, NASDAQ, and the Russell 20%. So you had a big run in November. Did that surprise you, and what does it tell you about December?
Well, Nicole, first off, good morning. Good to talk to you again. November traditionally is a pretty good month. It's actually the second best month of the year, going back to World War II. April, believe it or not, is the first best month in terms of average price change. December, not far behind, up an average of about 1.5%. But the November-December timeframe, good seasonal optimism. Also, following the conclusion of a presidential election, the frequency with which the market goes up is usually pretty good. And December, as I mentioned, in terms of a batting average, has the highest frequency of posting an up month of all 12 months of the year. But at the same time has the lowest volatility, actually 23% lower than the average for the other 11 months of the year.
What's interesting is how you talked about within your notes the post-election sprint, you called it. Obviously, we've seen so many record highs since Trump moved into the White House, one after another. This year has been a slew of them. The S&P has had 26 record closes. But what's interesting is you said that, just to be clear for folks, is that when you have a great November, the way we have, you might still see a rally in December, but it may be, in your words, subdued.
Exactly. You might actually be stealing from Santa, as I like to say, because if November is very, very strong, and this one up 11.3% through last Friday, if that had been the full month, would have been the best November since 1928. But even just looking at 5% or more in an average November, we've had 14 of them since World War II, and it ended up where December was still positive, but the percent increase as well as the frequency with which we saw an increase was more subdued. Add to that, because we had a Dow record, we had an S&P 500 record, and a Russell 2000 all simultaneous on the same day. That also indicates that about 1 month after that, the market sort of takes a breather, catches its breath, and as a result, we still are up, but the average amount is less and the frequency is less. So just don't expect too much in the month ahead.
Right. But what I do like for the bulls especially is that you're not saying that we're going to turn around or give it back or something awful is coming after the rate run we've had. There's nothing to say, oh, watch out, brick wall ahead. You know what I mean? I like that you at least say we're still going to trickle a little higher, right? Trickling up. Tell me about the strength that we've seen in small caps, because I think that the Russell, and you can tell me your thought there because I heard you trying to interject, the Russell's up over 20% for November. So finish your thought and then give us a look at the small caps, your thoughts.
Well, in the month of November so far, we had seen small caps up the most, as you just mentioned. S&P small cap 600 up 21%, mid caps up 16% versus 11 for the large caps. Historically, if you look to December, we see that outperformance continues. Small caps exceed mid caps, which exceed large caps. And we also tend to see many of the value-oriented sectors be the better performers in December. And it's not just technicals, it's not just seasonals, it's also valuations and earnings growth. We are starting to look ahead by 12 months rather than simply looking ahead by 1 month. And when you look to 2021, expectations are for a pretty strong 2021. We're looking for the small caps to be up 76%, mid caps up 36% in earnings versus 21% for the large caps. So there's more room to grow the smaller you are.
Right. So now what's the outlook? Are you feeling positive for not only the rest of the year, which it sounds like you are, but going forward?
Yes, I am. I'm looking for a mid to low teens price appreciation in the year ahead for the S&P 500. I think we're going to see better than expected GDP growth, which right now is pegged at about 5.5% for 2021. Looking for an improvement, a ramp up in earnings expectations. So instead of the 20% growth, I think we get something stronger as the economy reopens and we have consumers who are experiencing pent up demand start to satisfy that. And as a result, we'll see an improvement in small cap, mid cap, large cap, as well as an emphasis more toward the underperformers value in general, as well as international stocks.
Right. So, I mean, overall, and earnings, just a quick thought on earnings expectations.
Well, looking for the fourth quarter, still expected to be down. Right now, S&P Capital IQ consensus estimates point to a 11.6% year-on-year decline. However, when we started the third quarter reporting period, expectations were for a 24% loss, and we ended up losing 8%. So I think that once again, we are going to be surprised to the upside when Q4 earnings are finally announced.